What is one of the most painful truths about trading? Your ego will wreck your profits. She knows about this. She knows because this $28,000 short trade she just closed almost fell apart when she let social media hate cloud her judgment. We're going to talk about her entire process for this trade, breaking down every single move, and do a deep dive on the psychological trap that she barely survived. And all of what she went through, and all of what every serious trader will face at some point. So pay very close attention to this, because if you don't, it could cost you your next biggest trade. Let's get into it. This is Tory Trades, how I closed $27,000 on crude oil.
All right, we're going to start with entry criteria. What prompted me to get into this trade? So we're looking at crude oil right here on the 4-hour time frame. This is the futures market. So we've got an upward trend with a very recent pullback here. We've got 1, 2, and 3 touch points of this upward trend line, which constitutes as the start of an A+ setup, but there's more that factors in. So at minimum, we need 3 touch points, and we need a break of a trend line that has 3 touch points.
Okay, if you know Tory Trades, you know that she is a trend line trader. So I got her whole thing mapped out for you. And my goal with this is to make this video 10 times more valuable to you, to make it 10 times more likely that you'll take something from this video so you can get some more of this. Okay, so her entry strategy, right? She uses this thing called the 3-touch trend line break, okay? So 3 confirmed touch points over a month's data. So that's the first thing that she's going through. And what she has is a checklist. Do you have a checklist for your trade setups? That's how clear she is on her strategy, which is the mark of a master. If you don't have that, you need it.
So this is the start of the entry criteria. The next thing is we need the trend line itself to have over a week's worth of data. So if we go back here to the first touch point, we're looking at December 26th. So this has almost a month's worth of data behind it. Love, we're already on the right track. 3 touch points, over a week's worth of data, almost a month's worth of data. And then the last criteria, is this a low risk setup? And how do I identify a low risk setup? It is where the price is at right now. So this is where we got the break right here on this candle in conjunction to the opposing trend line. Opposing trend line. This is this downward trend line. How close is the price to the downward trend line? Very close. So this checked off all of our entry criteria. So let's go to TradeZella. We're going to journal this trade. So we're adding a playbook to this specific trade.
All right, so she's got her entry criteria and she's just going down the list, check, 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 right? And notice she's being patient and she's waiting for those criteria to get checked. She's not FOMOing in. Do you FOMO in? Notice she's not FOMOing in, okay? So she's got the 3 confirmed touch points over a month's data. I think it was a week or a month. And then she's got this low risk zone where price broke support near the opposing trend line. Now, why is she entering there? Because that gives her a great risk to reward ratio. The low risk zone, if she, in this case, is short, so she's betting on the price going down. She's waiting for the price to get close to where she would put her stop so that her risk is small and her reward is big, which is awesome because that means that she's going to be able to get away with risking less on this trade and potentially making a lot more.
This was the 3 touch point break, entry criteria. Trendline had 3 touch points. Yes. We had over a week's worth of data. Yes. And the next, was this a low risk setup? Yes. Next is, were the market conditions trending? So I never want to enter if we are in consolidation, if we're just moving sideways.
Okay, now let's actually look at her chart, okay? So she'll pull up the chart and she'll show this, but notice that what she's doing is she's being disciplined, right? She's being disciplined and she's just executing her process according to her rules and procedures. This is worth writing down. Your job as a trader is to execute your rules and procedures according to your plan.
And if we go back and look at this chart, we're absolutely within trending markets.
Okay, so she's short, right? So the price is moving down here. First, it was moving up here. If we go to the left, you got to put 2 things together to make a good trade: context and momentum. Another way of saying that is what was happening and what's happening now. You put the two things together and you make your best decision. Now, what's been happening is a bull trend. Notice we went up, 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 up. This is a very strong bull trend. Notice it's like almost straight up, okay? You can tell how sharp, how strong a trend is by the slope of the line. You know, slope of the line, it's like almost vertical here, right? Look here. So you've got some very, very, very strong buying. Now, what happens when the market does something very extreme like that, oftentimes is it will go kind of in the opposite direction, right? So because there's just so much aggression, the other side, the bulls in this case, are able to push the price up so high, the bears come back and they come back with just even more aggression, right? So you see that sometimes with these extreme moves. And also, if something's very extreme, it's usually not sustainable. So we went up really high, really fast. And then notice we came down, okay? We broke this trend line. If we were to connect these lows here, the first break of the trend line would be right here, okay? And then we tried to come back up again. All of these attempts, this pullback here, this was a retest of that high, okay? And the price failed to get all the way up there. Now, we made a double top. This is a lower high double top because this was the top, and then now this is the top, right? And this top is lower than this top. So we've got a lower high double top, and now the price is moving down. And she's saying she got in here. You see this little arrow? That means that that's where her entry was, okay? And then this is her exit, and she'll tell us about that next.
When the price broke, we were breaking an upward trend and potentially starting a new downward trend. So no consolidation here. So we can also mark off trending markets. Now, what did the entry look like? So we have the entry criteria all checked off. How can I make sure this is still a low risk setup? How many contracts did I go in? And how much did this cost me? First, let's go back to the entry here. When I enter a position, I am usually entering upon break. In this specific setup, I waited for the 4-hour candle to close. I don't.
Okay, so notice that she's being extra careful here. This was her extra confirmation. She waited for the 4-hour candle to close, which is unusual for her. Now, if you're me and you watch this channel, you know I am always recommending waiting for the candle close. And it sounds like Tori may be coming around to that here. Waiting for the candle close is one of the simplest, most effective ways that you can increase your trading results. Just waiting for the candle close before you enter and then making a decision.
Usually do that, and I believe it's probably been over a year since I've done that. But coming into the next trade of the year and coming into the next trade after having my record trade, I was just looking for additional confirmation. I wanted to feel really, really good about this setup. I needed the stars to align here. So all criteria was met across the board here. So here's where I entered my position. I went short 10 contracts. Now, what does the risk look like? If this trade doesn't work out, how much am I going to lose? If the price got above $76.08, I was willing to lose $8,900. So my R multiple, which we'll go over how much I made in the profit, was 3.11. You'll notice in all of my trade breakdowns that I don't have a planned R multiple. And that is because I don't have an initial target. I don't know what I'm aiming for. I'm trying to stay in for the entirety of the trend. When price breaks the trend line, then that's when I know close my trade. Or
this is a great strategy. That means you let the market tell you how much it wants to give you. Now, in some cases that will work against you, but in many cases that will work for you. And what you have to do is be very disciplined in order to execute that. So we've got her entry strategy, right? You've got the 3 confirmed touch points. We've got the low risk zone so she can get a small risk with a potentially really high reward. And then she waited for that 4-hour candle to close, which has taken a lot of patience, you can imagine. 4 hours for each candle, right? She entered short with 10 contracts, and she's saying that's half of her usual size. Now, why did she do that? We're going to find out right now.
When price gets to an area of support or an area of resistance, then I know it's time to close the trade. So I don't have the initial planned R multiple, but I do have initial risk. So I know.
So she knows her risk, and that's the most important thing, okay? So she's got her initial stop loss set. She's going to trail her stop loss along the trend line as it moves in her favor. In this case, it's moving down. So she's going to adjust as the price moves in her favor. She's going to take profits and tighten that stop loss. That's called a trailing stop. And her risk to reward on this trade, she's going to mention in a minute, is 3, okay? But what she's saying is she did not have a preset profit target. And that is something that is great if you're trend trading, because it just means you let the market give you as much as it wants. Why would you want to limit how much the market's going to give you? You don't know how far it's going to go. So what if you think that it's going to go, 2x your risk, but it goes 10x your risk? Why would you say no to that? Okay. So it's a very smart strategy, but it requires an incredible amount of discipline and patience, the two most important trading psychology skills.
Immediately, if this trade goes against me, this is how much I'm willing to lose. This $8,900. And what's cool is my risk is dynamic. It is ever changing. It says 76.08. It could have been 76.06, 76.10. So it's very dynamic, but it's not concise or to a percentage or a dollar amount. It's truly just where the price is in conjunction to the opposing trend line. If price was to immediately go against me and break the opposing trend line, which I call my safety line, that's where my risk goes, on the other side of it. Now, depending on how heavy of a position I go into or how light, it can be anywhere over here. It could be between 76.13 to 76.50, anywhere in this area that I'm comfortable with losing to put my risk. So that's one of the coolest parts about this strategy, is that the risk is dynamic and you don't know where your take profit is. You're trying to stay in for the entirety of this move, the entirety of the ride. But now let's go over trade management. What did it look like? So we took a short position, 10 contracts at the break of this upward trend line, A+ setup, short positions. We got a break. I'm in the money, and then price comes against me.
Okay, so here's her entry, right? You can't really see it so well in the chart, so I'll point it out for you. She's entering here. The price moves in her favor eventually, right? A little bit, and then it pulls back pretty sharply, and it gets very close to that stop loss.
Pulls back. I'm in drawdown. But then it also creates a retest. It retests this upward trend line. And then we got a continuation. It continued down. Love seeing that. I love to see a break, a retest, and then it fall, and then it melt.
Okay, so that just shows you that she's trading the way smart money's trading, because if she has her stop loss right there and to test that, she's on the side of the institutions, which is very good. Okay, that's what you want to be doing. You want to be doing what the smart money's doing. That's how you trade effectively. Okay, now she reduced her position size due to psychological caution. So that was one of the reasons, right? Is because she didn't want to be overconfident. We'll talk about overconfidence in a minute because we've got trading psychology to discuss, but we'll get to that in a second. She reduced her position size. She usually trades with 20 contracts. She's trading with 10 contracts instead. And that's partly due to her trying to avoid overconfidence, which is very smart, sizing down so she doesn't do something stupid, right? Just to kind of take the pressure off a little bit. But also, she did that because of social media pressure, which is a real problem, okay? This is a real problem.
That's exactly what happened. We've got a great big giant red candle. It's melting down. But then we get days of consolidation. Back and forth and back and forth. This was the struggle.
I don't know if I would call that consolidation. You're making lower highs. The high was here and now the high's here. Okay, this is just a channel pattern. And if we notice, look, can you see that this whole thing is pretty uniform, right? Like if you look at this line, this upper trend line, okay, notice that we're staying right there. Okay, so the bears are selling every time we either touch that line here or get close to that line. So this isn't really... I don't know. This is kind of like a little trading range, but if you zoom out just a little bit, you can see it's staying in this channel pattern, and she's short, and this is a bear channel, which is exactly what you want happening, okay? So let's check in on our strategy. We've got the risk management and the position sizing. We already went over that. Now let's get to the trade management and execution, because she mentioned the break and the retest, looking for continuation to the downside. Textbook A+ setup, awesome. Do you have a checklist that defines what your textbook A+ setups are? If you don't, you need it. And I will challenge you right now to make one, post in the comments, and tell me that that's something you're going to do, because that will absolutely 10x your results. Held through drawdown and consolidation for days. And she's talking about that right now. Now, next up, she's going to trail her stop to break even right after the price progresses along the trend line. But let's not get ahead of ourselves.
This was the hard part. This is where it takes some serious mental capital to be able to hold through this ebb and flow. You're making money. You're back to break even here almost. Then you're making money. Then you're back to break even in the middle of the night. it was maybe closer to 2 a.m. here. I remember.
Reminder, these are 4-hour candles. You can see 4 hours right here. So each one of these is 4 hours. Okay, so this is, and she holds trades for like days or weeks. Okay, so this is requiring an extraordinary amount of patience.
Not getting much sleep. I remember the alert going off. I have alerts set on these trend lines, and it was saying that price was touching this trend line. I was like, wow, I might have to consider closing this trade pretty soon. Now, as price progressed along this downward trend line, along my safety line, I was able to take my risk and move it from that 8 to 9,000 down to break even. So that's the coolest part about this strategy as well, is that as price progresses along these trend lines, you get to move your risk. You get to trail your stop essentially, or trail your risk. So then it moved to break even. And then if I had still been in this and price progressed and continued to move down, it would be moving into profit. So we got some consolidation, mental exhaustion from this. And then finally, Wednesday was entry. We got Monday morning, giant candle down. Price got to this higher time frame, upward trend line. I consider this a version of resistance, and went ahead and closed the trade. So I was happy with this exit. So now let's go back to my playbook and look at the exit criteria.
And one thing she's always doing is closing her trades early and justifying them. I know this because I went back and I looked at her review of all of her trades for the whole year. She very, very rarely, if ever, holds her trades until they actually go all the way. She usually closes them early, pretty much always, and justifies that. But it's something that she said that she's working on, okay? So she closed her position, as you can see, right here, okay? That's what that blue arrow means. The trading view, when you see that blue arrow, that means you're closing. Well, that means you're buying, okay? So red is selling, blue is buying. That means she entered short here, and she bought back her short here, okay? And justifying her closing that at the support zone. But it is a part of her process, although it is something that she's working on, okay? So she'll get into the results now, which is, spoiler alert, $27,600 in one trade. Impressive, right?
Did the price hit support and resistance or cross the safety line? Yes. Now, there are some instances where it didn't do either, and I just closed the trade because I was up X amount of dollars. So it is incredible to see that I checked 5 out of 5 boxes. A+ setup, textbook trade here, rules followed 100%. It's so exciting to go over a trade like this.
Okay, so the lesson there is your goals in trading, right? Most people's goals in trading are based on money. Of course, why would you be trading if you don't want to make money? However, the professionals have process goals. You know what a process goal is? A process goal is looking at the result that you want. Let's say you want to make 100 grand. And you say, okay, what's the process that's going to yield that result? And you make your goal the process, which allows you to trade much more effectively. And then what you can do, which is what you can see she's doing here, is you reward yourself, you acknowledge yourself, you find joy, satisfaction, you pat yourself on the back for following the process, not for the money, but for the process that leads to the money. And that puts your trading psychology in the most perfect place. So process goals over outcome goals is what I'm recommending here, because it will help your trading results.
Criteria was met. I followed the rules to a T. We've got entry here at the break. We got a retest, continuation, a little bit of consolidation, and then boom, we finally got the move here. Price got to a version of support. It's a version of support. You anticipate that the price is going to bounce on these trend lines. And then I closed my position today, this morning. Now let's go into the stats of the trade. So we've seen the trade as a whole. We understand. We've dissected it. We've picked it apart. But now let's go into TradeZella to see the stats. So net profit and loss was $27,683. This was a short position, 10 contracts. I was able to capitalize on 2.77 points and 2,770 ticks. Ticks per contract were 277. The commissions and fees were about $17, and that's probably pretty accurate. It might even be a little bit lower, but I think that's pretty close to true. TradeStation gives excellent commissions, excellent fees for commissions, very low, very competitive. Okay, and then the net ROI. Everyone always wonders, they're like, so you only made 3.82%? That net ROI is in conjunction to the actual cost, the actual value. I'm trading with leverage, so 18.76 was my actual net percentage of profit and loss. 18.76%. So that's just something that I wanted to show you guys, the percentage of the actual trade here. I was able to make 33.86%. That was my record trade ever on the 10th. And then here on January, this is the January 27th, this is the trade here that I closed. So 18%. Okay, so the gross profit and loss, 27,700. The adjusted cost, you guys know that.
And next, what we've got is the takeaways for you. Okay, so this is what we want to get to next. But notice, banger trade, 18% ROI, 5 out of 5 A+ textbook trade, followed her process according to her rules and procedures. And the key insight is that she followed her rules and she was able to manage her psychology. Now, she was tempted to do things differently. But the lesson here that I want to sort of highlight is that you will get rocked and you will get shaken up. And a lot of times a good trade isn't, it's ugly. Okay. So you've got stuff come up, you feel like closing it, you want to panic out, but you just find some way to actually make it through. So you don't need to be perfectionistic about your trading, okay? Because trading is not something that lends itself well to perfectionism. You want to say what works, okay? And if it worked, it works. So that's fine. You don't want to let social media or external opinions affect your risk management though. That's what she's going to get into next.
This is the actual value. This is the actual adjusted cost, but I'm trading on margin, so I get to leverage my position. The playbook. This is the 3 touch point trend line break. And then you can see my Zella scale. This is how much I was down at one point versus how much I was up. Trade rating, I'm giving this bad boy 5 out of 5. Incredible trade. All right, and that was, I feel like, the nitty gritty of the trade itself. Let me see if there's anything else I can show you guys about this trade. Oh, you know what? Let's see the amount of drawdown I was in. Let me see if that'll show. So this is fun to see also. So as I entered the trade, we're down $100. We're down $1,200. We're down $4,000. Then we're up $1,200. And then the remainder of the trade, the remainder of these days, in profit. And then finally here, $27,000, we closed in profit. So you can see this is the kind of emotional roller coaster I was on, a great visualization of the emotional roller coaster I was on while in this trade. So got in immediately against me, $1,200 and then $4,000. And then you can see many times it got real close to break even. Here I was only up $3,000, but I was up $9,000 at one point. And then here again, only up $4,000 when I was up $13,000 at one point. And then finally we got that big move at $27,000. But I hope this was helpful, guys. This was the...
Okay, now there's just some comments on her avoiding social media and her temptation with that. So let's hear that, okay?
Me as an educator and a content creator, and really as a trader, it is always better to review, break down, and go through your trade when it's fresh on the brain.
Review your trades when it's fresh on the brain. That's really key, okay? So do your review the day of or at the end of the day.
My risk. What was the percentage of profit and loss? Really just, I'm talking the entirety. I just want to dissect this as a whole. So sit down, get comfortable, take some notes. I've got my iPad here, and so I can show you guys account balance, the amount of money I'm trading with, the percentage of profit and loss, the risk, and then how much position size am I trading in conjunction to my capital. But I want to talk through some psychology before we get into strategy. These are some things that I was struggling with on this.
Okay, so here's where she was really struggling with the trading psychology and the mindset. And the first thing she's going to mention is she overcame the emotional pressure from social media criticism. Now, she's still really impacted this, which is a problem. But she's going to talk about how she dealt with that right here.
This particular trade. The first thing was getting into the market, taking another trade after having a record trade. I'm a very self-aware person, so that reflects and bleeds into my trading as well, thankfully. So I went into the next trade of the year overly cautious. I wanted extra confirmation. I wanted to do a full body scan, make sure that I was in the right headspace psychologically to go into this next trade. One thing that I've always noticed and always am aware of is coming out of a record trade, it's just known. I see it happen all the time. I've done it before where you over leverage and have overconfidence and ego comes into play and you're like, that was easy.
Okay, so overconfidence. This is the biggest thing that will kill your trading profits, okay? So she knew that and she stayed self-aware. right? She knew that and she stayed self-aware to avoid overconfidence. Now, if you're a trader and you're taking this seriously, overconfidence is one of the biggest things that will completely destroy your profits. So this is something I want to warn you about because it's something you're going to face at some point in your journey. And according to Jared Tendler, the author of The Mental Game of Trading, one of the best books on trading psychology, he says that traders experience overconfidence in a wide variety of ways. And if you're not showing this emotion outwardly in a dramatic way, then you may assume you're not overconfident, but that is not the case because overconfidence can show up in understated ways that are more subtle, okay? So what are the signs of overconfidence? And this is the takeaway for you. These are the warning signs. So I want to give these to you so that you can write them down and take them with you so that you can avoid giving back all of your profits, okay? So here are the 8 signs of overconfidence. The first one is you're overly convicted on a particular trade. Now, I see this all the time. If you're Danny Trades, then you have really screwed this one up, okay? Because you don't want to be overly convicted on a particular trade. So that's a sign of overconfidence. Why? Because you don't know what the market's going to do. You and no one does, okay? So overconfidence is starting to think that, oh, you're sure that this is going to do what you think. It's not for sure going to do what you think, no matter how much you think or convicted you are, okay? So you got to let that go because that's a sign of overconfidence. So if you see that come up, watch for it so that you can deal with it. The next one is refuse to take profits at your target because you assume you'll make more, okay? Now, Tori's dealing with the opposite of this, but that's a big mistake. And what will often happen after you refuse to take profits at your target is that it will quickly go against you, and then you're screwed. The next sign of overconfidence, you're eager to trade, but you're less rigorous in your preparation and execution. Now, this is one of the most common ones. You're showing up to trade, but you're not rigorous with your preparation, and you're not careful about your execution. For example, do you have a checklist that lists exactly what your A+ setups are, and are you using it, okay? Another sign of overconfidence, quickly making decisions because it feels like you can't lose. That is a huge sign of overconfidence. Next, justifying more risk by saying this has to go up. Basically, another version of thing 1. Next, want to always have action regardless of the risk, okay? That's like always having to think that you're in a trade. Just always, impulsively getting into trades and just being uncomfortable sitting there. Neglect valuable signs and focus on only a few pieces to make or buy to make decisions, okay? So valuable signs, right? Like, for example, the market is clearly moving down, but you're going against it, right? That's a very clear sign of overconfidence and that your logical brain has been shut down by your emotions. And the next one of overconfidence, the next sign of overconfidence, sign number 8, impulsively enter or exit trades. And I certainly know that I've dealt with that, okay? So those are the signs of overconfidence that you want to watch for. And what are the takeaways for you? I said my goal was to make this 10 times more valuable so that you're 10 times more likely to take something from this video and use it to make more of this. So what are you going to take from this video and apply? Post that in the comments right now. What's the one biggest takeaway that you're taking from this video and going to use for your own trading? Because this is about you, okay? So here are the key takeaways as far as I am concerned. 1, don't let social media or external opinions affect your risk management. And she's talking about that here, right? She allowed that to happen.
Do it again, but better. And you go into the next trade over leveraged and too heavy. And what a bummer if it doesn't work out. So I am overly aware of that emotion, that feeling, and that mistake. So I went into this trade. I want to be regulated. I want to be fully and completely regulated in the right headspace coming into this. So the first thing I did was go in light in position size. So I normally trade with 20 contracts. I traded with 10 contracts on this specific trade. And then some other things just that I'll be transparent with you guys and vulnerable with you guys. I also had some issues or some hesitation. I'm not sure exactly what the word is, but I was letting social media dictate some of the decisions that I make in trading. Really only the position size and the entry criteria. So let me break this down for you. I have been criticized on social media, and maybe we don't have to talk about this. Maybe it's unnecessary. Maybe at this point, it's just not worth the energy. It did play a pretty big role psychologically for me in this trade. I went in light in position size because I really wanted to show everybody up. I was like, you know what? Fine. All of you people say that I over leverage or I go too heavy in position sizes or I don't risk the normal 1%. I understand that my strategy is unconventional and some of the things that I do are unconventional in trading. But it has gotten me the success and gotten me to where I am at now. It's incredible. and I would not change anything. And then I say that, and here I am trying to cater my trades to social media, which is so ridiculous. But anyways, I'm still very grateful for the trade that I placed, and I am going to flip it into a positive. And so,
all right, so she is letting the social media hate affect her risk management. And she said that was partially because of that. Okay, so you don't want to do that. It's a major mistake. Okay, so my recommendation is just don't post on social media about your trades. Don't really use social media when it comes to trading. Okay, just stay focused and only talk to traders who are doing things that are going to support your results, not random strangers on the internet. That's a massive mistake. Okay, who cares what they think? So, and and if you look in the comments, they're telling Tori to forget about social media and not listen to the haters and just tune that shit out. Journal every trade and dissect your wins and losses. Now, if you're not doing this, you are making a huge mistake. And I would bet that if you are not a profitable trader or you haven't experienced profitability in trading, it's because of this. So journal every trade and dissect your wins and losses. This could be the day when you start doing that transforms your trading results. The next key takeaway for you in your trading is emotional control through drawdowns being vital, okay? Now, whether you're swing trading or you're scalping or whatever, okay? If you're going to see a pullback, then that's something that, you're going to have drawdowns, right? The price is going to go against you and you're going to have to deal with those emotions. So notice that you're going to have to be controlled. You're going to have to be in control of your emotions instead of getting impulsive. And that's something that requires practice. Now, how do you get good at anything? Practice. And the more that you practice, the better you get. So you want to be able to do this and do it intentionally. Don't do it like some sort of thing that you're being forced to do. Okay. This is one of the key distinctions between the best traders and the worst traders. The best traders have more emotional discipline. But they didn't start as the best traders. They started as just like you, impulsive and FOMOing into trades, if that's what you're doing. So practice this, and the more you practice it, the more it's just like lifting weights. You just get those emotional muscles, but it's with your mind and emotions. You get them stronger the more you practice that discipline and that emotional control and sticking to what you said you were going to do. Practice this across every area of your life. Do you do what you say you are going to do? Is that the kind of person you are? No one's perfect at that. So every single person on this call right now, every single person on this live stream, every single person that watches this video, there's something today that you said you were going to do, something you promised to someone, something that you were expected to do that you didn't fulfill on. No one's perfect in this regard. And every single one of those things is an opportunity for you to strengthen your emotional control and discipline and to fulfill and deliver on what you said you were going to do. Now that translates directly to your trading results because you want to be the guy who you can count on for yourself. When you say, here's where I'm going to enter, here's what I'm going to wait for, here's where I'm going to take my profits, and then you know that you can count on yourself to do exactly what the hell you said you were going to do, that's the mark of a master. And the final key takeaway for you is to stick to your playbook criteria, rules over emotions, okay? Rules over emotions. Now you tell me, what is your number one takeaway? What is the one thing that you're going to take from this video and apply in your trading today? Post that in the comments right now. Show me that you came here, not just for your own entertainment, but to actually cause a radical transformation in your trading results, which is my goal for you. If you want more information on my strategy, go to tradesbybren.com, and I have a downloadable PDF for you where I'm going to share with you my 3 favorite trades. And I'll share with you the 3 patterns that I look for, how I set my profit target, how I limit my risk. And also, if you like this video, then I really recommend that you hit that like button and subscribe so you can see more like this, okay? And if you're curious about my tools, the tools that I use, for example, my favorite trading tool is TradingView. And if you're curious about TradingView and you want to trade with the tools that I use and see the other tools that I recommend, hit the link in the description. I've got those linked up for you. Thank you for watching, and I'll see you in the next one.